What's going on, guys? Good morning. Good morning. Good morning. Good morning. Good morning. Looks like we swept yesterday's lows. This market is still weak. Very, very weak. When is it going to stop? Right? When is it going to stop? I hate these times. These cycles, I absolutely hate. It's just so difficult. Oh, that's Tesla. My bad. That was Tesla, guys. So we did not sweep yesterday's lows on NQ. I had Tesla still pulled up. Tesla looks weak too. Jeez. So we're holding this dead cat bounce here off the 100-day moving average. That was the area that I was focused on yesterday. That 100-day moving average right here. Let me know if you guys can hear me okay. Make sure the volume is okay. Um Yesterday's channel high, that macro high is definitely going to be an area of resistance. That's definitely going to be an area of focus to see if maybe, today we're up 220 points, to see if maybe they want to stretch it. And if they do want to stretch it, we'd be looking at something of a price target of around 450, which is another 100 points. Other than that, this is what is called an inside bar day, right? It's an inside bar day. We haven't taken out the lows, we haven't taken out the highs. Pure dead cat bounce. 5-minute time frame pulling back into our linear regression support. So if we kind of look at, it's going to be the initial balance, right? The first hour highs, that high is sitting at 373. Break, retest. So if the day is going to continue to be strong, we do have 100 points to the upside that we can potentially push up to. What you would want to see is you would want to see the bulls to hold this, right? This break and retest. So again, initial balance highs here. We broke. We're retesting. You'd want to see this hold, and then you'd want to gradually see it start to take out that high. That could be another area of opportunity for a long there. But I'm really going to be working on this 30-minute opening range strategy, not just so much as a setup, but as a whole system. Because there's multiple ways to trade it. There's multiple different areas where we can use as risk, depending on if you want to be more aggressive and you want the quick move and you want to call it, or you want to sit in a move a little bit. Less size, obviously. More risk in terms of points, but not dollars. We're going to risk around the same amount of money. But we're definitely going to get that in order. I think that's going to be really good. What's up, David? I think that's going to be good. And again, it's going to get me back to my roots. It's going to get me back to my roots. I'm a decent scalper, but for me, just in my trading career, some of the best opportunities that I've had to generate cash for myself consistently, big cash, is when I'm looking at one level, I'm looking at one particular area of interest, and then I'm attacking it, whether I'm attacking it once or I'm attacking it 2 or 3 times from multiple angles. It's definitely, I do a lot better that way, because it's very clear cut. Either I'm going to win on this trade or I'm going to lose X amount of dollars, right? Either I'm going to get paid out on this trade, or it's going to be technically damaged and I've got to just get out of it. And at that point in time, it was enough risk. It was enough risk in terms of points to, hey, that idea just didn't work. And if that was the setup, there's nothing else really that's going to interest me, right? And that's how I've got things set up with my options. I've done that years ago. I've got these levels where I'm looking at if that level gets confirmed, or that specific pattern or that specific area of interest works out, it's great because I did my job and that's it. And if it doesn't, I'm able to pull all the pressure off the gas and basically not take a trade anymore, because it's like, hey, I spent so much time in trying to land this one perfect trade, and if it doesn't work, hey, I'm going to get another opportunity tomorrow. And on a grand scheme of things, if we really think about prop firms, because I've battled with the prop firms for the better half of 3 years. My first prop firm was in 2021. I've scalped my way to payouts. I've oversized my way to payouts. I've done super small, a lot of days just stacking super small to payouts. And after all of them, they still frustrate me, because I still either A, feel unfulfilled, okay, in terms of profits. Guys, we're getting a nice bounce off of the linear regression here with a little doji candle here. If this closes over the 5-day moving average, we could potentially start to run 400 again. But I've struggled with it because when I'm scalping, I tend to want more. When I'm taking super small profits, taking more trades, I tend to win a certain small dollar amount, and then I start to slowly chop it away and then finish with the lesser dollar amount, because obviously it's probabilities. I'm taking more trades. And when I think back to what do I do best, right? What's paying my bills? Trading stocks, trading options. It's trading around one particular setup. And again, at the end of the day, I've got to do what's best for me. In this setup for the 30-minute opening range, and I'm going to do so much back testing today, like in 10x speed, fast forward. But there's a lot of different ways to play it. So I don't just have to play, okay, here's the level. The level is 20,000 on the NQ. If we break it, go long or whatever. There's so many different ways to play it. I can look for the break and retest. I can look for the, a flag pattern off of that. I can look for the second entry, or I could just say, hey, today we're just going to fire the quick scalp. It works or it doesn't, and that's it. What that's going to do is going to give me 30 days, right? There's 22 trading days in a month. It's going to give me, allow myself 30 days with this strategy to see if that balance gets the payout. And if that balance can get the payout for a game that we're playing, which we're playing a game with the prop firms, I will say this, the better trader you are, the worse you will do with prop firms. The better trader you are, the worse you will do with prop firms. And what does that mean? It means that the better you get at trading, the better you get at identifying moves, the more you trade, the more you tend to work yourself out of bad positions, the more you tend to push back profits because you know how to trade. You're just going to take another setup. Well, that setup was on the wrong side of the probability. You took a loss. Guys, if anyone took the bounce here, I'd be taking profits right here, right now. Right here, right now, I'm taking profits. Right here, right now. So, you know, there's if we I gotta again I'm gonna actually write it down, probably make a PDF with some clear cut risk management rules and stuff. But I'm thinking about, you know, I've got to make it worth it in terms of a stop loss to be where if I lose the trade, I do have to stop out on the day because hey, we're not going to lose double that. And I've got to make it worth it on the profit side, meaning it's got to be over $100. It's got to be, you know, probably close to $200 minimum win, and you know, a sweet spot would be 300 to 400. But if we can do at least over 150, 250, somewhere in that ballpark off one particular trade, that's it. That's all you need. And then from there, it's just about logging those days. Even if you have, you know, 3 winning days out of the week and 2 losing days, you know, the next week we could have 4 winning days and 1 losing day. I've got to work out the math to where, you know, it's going to allow us. And I like to start a ballpark with about 65% win rate, 60% win rate. If I can hit at a 60% win rate, can I be profitable, right? So at that point, the only thing that would make me unprofitable would be anything less than a 60% win rate. And once I have that number, then what I do to my strategy is I build the numbers in terms of stop loss and take profit to manufacture profitability, like expected value after X amount of trades, which in this case would be 30 days, would be 30 trades. You know, maybe closer to 40 trades because I might take 2 off the same setup. Might be, you know, one of them might be a scalp, one of them might be a longer hold. But guys, if anyone got long off that retracement, please take profits. Again, not financial advice, just opinions. Coming right into, actually, I don't even need that. I've got a Bollinger Band up here. Got resistance here at around 410. Bollinger Band, we're right in that zone. So you might want to, you know, again, clear off there. Oh, no, 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 no. And also, guys, I think for the foreseeable future, the first attempt on anything is probably the worst that we can do here. So grabbing into a trade, the first attempt that it breaks through, it's not the best. For example, even look at this flag. It's not the best flag. It's only 2 touch points. It's not even really a 45-degree angle. It's just slightly sloping. But imagine if you got in because you thought we were going higher. You're stopped out here. This is 29 points. So second entries. Okay, second entries on all your setups. I don't care if they're my setups or your setups. Second entries will probably do you a lot better. Try it, right? Allow something to get broken and allow it to get reconfirmed. If it does break your level, it breaks your entry and it runs 20, 30 points, hey, guess what? Tip your hat to the market. It is what it is. But I would rather let a trade go than to be stopped out when I don't need to. And here's the deal. Even if your second entry stops you out, guess what? There was 2 opportunities for that one setup to do what you wanted to. It didn't do it. I would prefer taking a stop out on a second entry because I know that there was just no momentum, no juice behind that. Then the first entry, where technically on that first entry, you can be right. It could just be fiddling around. The same thing with the 30-minute opening range today. It confirmed first entry, went up about 6 points in a tick, and then pulled back literally 29 points. And then pulled back again another 20 points. So, and then it went for 40, 50 points, 55 plus points, right? So the 30-minute opening range today was 100% a winner. Here's like the asterisk. How did you play it, right? How did you play it? Because depending on the way that you played it is going to depend on whether you won or lost. And that is what it is. Right? Depending on your stop loss, depending on your take profit, right? You could be people that were, trading 3 or 4 contracts that were looking for 2 points, 3 points on the first initial break. Guess what? They got paid. Everyone else may be looking for 10 points, got stopped out. Everyone who held it made money. Everyone who took second entry made money, right? A lot of variables and a lot of outcomes can happen on every specific setup. It's what setup and what outcomes, like what variables give us the edge, right? What's giving us the edge a little bit more so that we can live and die by it. Because if we can live and die by our edge, you're going to make money, 100%. There's no other way around it. If you can live and die by your edge, you will make money because the trust factor and the numbers behind that will make sense. After 25 trades, after 50 trades, after 100 trades, you will be profitable because the EV is there. Now, if you don't have the numbers and you don't have the correct variables, that gives you that small edge. And again, remember, we're working with small edges. We're working with very small margins. It's not like, oh, hey, we win 7 out of 10 trades, so we're just going to be up thousands of dollars. No. It's we're taking 100 trades. We're going to probably lose 30, 35, 40 of those trades, 45 of those trades. And there's only a little percentage there in between. Maybe it's 8%, 10%. That is actually profit. That is actually profit. And that's the number that we're working with. It's not the I win 70% of my trades and that's what I'm working off of. No, you have to factor in the losses, right? Because even if someone's running a 1-to-1 risk to reward ratio, and you're a 65% winning trader, so 65 trades out of 100 you're gonna win, right? So 65 trades, and let's say your average winner is 250, and I'm just throwing generic numbers here. Your average win on 65 trades is $250. Okay. Let me do this here. So you have, come on, calculator. 65 times $250 is $16,250. Great. That sounds fantastic. Guess what? That's not your profit. That's not your profit because, again, we're going to lose. So what's our edge? Our edge, our expected value off that is, let's say we're going to run a little bit of a negative risk to reward ratio, and let's say we're going to run a $300 stop loss. So a $300 stop loss times 35 losing trades out of the block of 100 is 10,500. Your EV, your expected value, is $6,000. It's $6,500 after 100 trades. So if you knew you were going to make $6,500 hitting at a 65% win rate over 100 trades to make $6,000, why the hell wouldn't we just do that? Why is there a reason for emotion? Of course, we're human. You're going to feel natural emotions. That's natural. What's the EV? What's the expected value? And can you stay to the plan? You see what I'm saying? And that's operating at a little bit of a negative risk to reward ratio, risking $300 per trade and expecting, $250 per trade. Those numbers have to be played with. Obviously, you can do things a lot more different, right? You can do, let's say, what is a $200 average winning trade, or not even that, because I don't even know if you guys are pulling $200 in a trade. Let's just say you do, I don't know, what do we do? 10 points would be, $200, right? I want to go lower than that. I want a number lower than that. Let me do 7 points would be about $150. Let's do $150 average winning trade or winning day. $150 times 65 is $9,750. Okay, $9,750. Now we can't run a 300 points, $300 stop loss, because that's not going to work. So let's do something like we risk $250 a trade. If we risk $250 a trade times 35 is what? 8,750. Guess what? Your edge is only good for $1,200 a month, which is fine, which is definitely fine. In 2 months, you'll be on your way to a payout. But what I'm saying is, do you see how the EV drastically decreases? If you're looking for $150 and you're risking, what did I say? Was it $200 or $250? 200, what was 200 times 35? 7,000. That's not bad. $200, 7,000, and 150 times 65 was what? 9,000. Now, I like that one. A $200 risk for a $150 profit over a series of 100 trades, your EV is going to be around $2,700. I like that. You can get a payout there. That's a good sweet spot. And how long does it take you to bang out 100 trades? Depends on your strategy, right? If you're taking multiple trades a day, you can bang out 100 trades in a week. You can bang out 100 trades in 2 weeks, right? If you're going to do something that I'm going to try to implement, 100 trades is going to take you 3 months. So again, I need a little bit more than $150 a day, or I need to have a higher win rate than 65%. I hope a lot of this is making sense. And if you haven't done math like that on your system, on your strategy, you're dead. You're absolutely dead, because at that point, you're shooting blind every day. You have no idea what you need to make. You have no idea what's a good number to stop out at. You're just taking trades for the sake of taking trades. You're running up a balance to run up a balance. And guess what? It's great when you run up the balance. It's great when you run up a $600,000, $700,000, $800,000 day. But if you have no idea how to self-control and stop yourself out at 300, 400, 500, that expected value diminishes at the end of the month, right? If you look at your 1 hour chart, this is the whole reason why we're getting snagged. So we're coming into lunch. If you were to look at the chart, and you ask yourself, what did we do before lunch? What would the answer be? What did we do before lunch? That's what you would need to be asking yourself. What did we do before lunch? And what could we potentially do during lunch? Well, if the market kind of bounced today, what's up, Simon? If the market bounced today, right? We've bounced a little bit of a dead cat bounce. Again, remember, guys, we're well below yesterday's high. Okay. We're actually like a little bit 418. So we're about 30, 40 points off from yesterday's high. We're coming into this dead cat. This dead cat bounce is coming into yesterday's channel. Now, what I like to look at here on yesterday's channel is 21,453. That was the overnight session, the pre-market session highs. I like to look at that because that could be a good magnet. If we do overshoot this, we can definitely come in here and test 450s. Okay. So if we understand that this is a dead cat bounce, like it doesn't take a rocket scientist to see that this is a downwards move. This is a dead cat bounce. We're actually creating not only a beautiful flag pattern for a continuation pattern down, but you could also see why we're traveling to the upside here. Now, my opinion, do I think that we come down right now and break this flag? No. I think we get into this area before this is all said and done, right? I think we get into this area right around here. And that takes us to 21,540 to 21,580s. I think we stay in this zone and it consolidates here. Now, how long it consolidates here, I don't know. It could be 1 or 2 days where it kind of consolidates there, and that's going to be the true test. Remember kind of what I said yesterday, those bulls on the daily chart, they drove us, or the bears drove us all the way down into the 100 SMA. And once they drove us into the 100 SMA, the bulls yesterday had a big question to answer. Are they going to continue to get steamrolled, or are they going to put up a little bit of a fight? Today, we're putting up a little bit of a fight. Are we out of the woods yet? Absolutely not. We're not out of the woods yet until we start breaking this downtrend. This pattern to me on a 1 hour chart, again, looking at, the previous 3 to 4 days, looks like we want to continue to grind higher into 21,550s. And again, whether we spend 1 or 2 days between 500 and let's call it 600, I don't really know. But it'll be the next question here for the bulls, right? This will be the question mark area. The next question for the bulls is, are they going to give way where we break that back down and then weak attempt at a dead cat, get rejected back in this range, and then start to put in new lows? Or do they get into this zone, chop around for a couple days, and then break to the upside? And then if we get over, 21,600, 21,650, then you could see a pullback into this zone where we consolidate here and then continue the up pattern. And then that was it. That was the pullback we needed for this quarter, for this cycle. I don't know. But again, why we're getting a little snagged up here is we're trading right at the 50 EMA. So the 50 EMA, and we're also coming into lunch. You see that? I'm looking at the 1 hour chart here on the NASDAQ. And this is the area that I'm really focused on here, is this range. And I don't want to draw anything on my chart because my chart has enough crap on it already. But yesterday's pre-market level and yesterday's high is what I'm focusing on for resistance. Makes sense? Looks like a little bit of an inverse head and shoulders, or a head and shoulders pattern here. Although this shoulder did break the head. But I've got 3 touch points here, right? Look at this. Look at this. Look at this. That area on your 1 hour chart is the 50 EMA. So we've been rejected 3 times. This zone here, up here, is also kind of, in the zone, right? Remember, in the zone of yesterday's high price. So that macro channel is kind of pinning us down here. Now, if we've bounced today, maybe during lunch you see a slight pullback, and I could see pullbacks as deep as 380. I could see pullbacks as deep as 350. If the market's going to continue to be strong, we're gonna hold, somewhere between 370 and 350, and it's going to continue to go higher. The market's not going to hold, then you're going to have a good short opportunity below 360 down into 335s and 324. That's what I would be looking at. So little choppiness here. What would I want to do? Not a whole lot. Not a whole lot right here coming into lunch. That's a fact. That's a fact. And again, remember, less is more, right? Less is more. So you've got to constantly be asking yourself questions during the day. And I do it all the time. And I'm not the best at it either. But I definitely try. I definitely try to keep myself standing upright. You know, what's my P&L right now? We're getting a 1 minute 20 play here with a little bit of room to wiggle. But I am sitting at a 5 minute 20 SMA. You know, what would be the next target? Maybe 63. You got about 10 points. Got about 10 points worth of room. But again, this is just an area where we're bouncing. So this range that we're in here is going to be tough because people looking to go long here for the breakout are going to get stopped out because they're going to pull back. People who are looking to go short here for the breakdown are going to get stopped out because you're going to bounce back up. So until you clear this range, okay, until you clear this range, you have to turn into a range trader, or you have to sit on the sidelines. There's no ifs, ands, or buts about it. That's the only thing you can do. Right? So you're either scalping long at the bottom of this range or you're scalping short at the bottom of this range. You're doing absolutely nothing in the middle. And I'm going to take profits there. Took a little scalp there and a few micros. Again, if the range is going to hold, we're going to start to bounce in this area. Now, I'm not the best range trader by any means. In fact, I hate range trading because I tend to get chopped up. But you would be looking to go long here somewhere in this range. You would just need to pinpoint where you can put a stop, and maybe it would be this swing low here at around 21,348. So what would we be risking here? 10, 12 points. Right. But again, you don't want to jump long on this candle. You want to wait for another candle. And the only reason why I'm saying that is look at what we've done in this range for the better half of an hour. Right? And in the bottom floor here was also about an hour's worth of consolidation prior to that, where it was acting as resistance. And then we've broken through, we've tested it multiple times here, 3 times to be exact, where we're kind of just holding this range. So again, just based on the pattern, just based on history, you're looking to go long somewhere in this range here. Until we truly start closing, you know, below, let's see, take this crap off, until you truly start closing, you know, below 30s, below 20s. Other than that, this is prime opportunity to get a bounce in this range. Again, if you're not a range trader like myself, just stay out of it. Just stay out of it. Because that's a problem that we run into all the time. I run into it all the time. I'm like, okay, I see what potentially could be happening here. I see it, you know, let me go long. And I go long here and it continues to go down, and then I give away profits. And I don't want to do that, right? But you know, it is what it is. My strongest level that I have here is obviously going to be the 200 down at 317, but this level I'm going to respect as well, which is 325. That 325 holds between 325 and 317. That holds. We are officially into lunch now. I'm going to pull up a 5-minute time frame here. We're going to see what kind of support areas we have here on a 5-minute. Kind of see if that's matching with our 1 minute that we were just looking at. So here on a 5-minute, we ran right into support at 330, and I've got more support at 316. In this particular scenario, on this particular pullback, I would like to see this range hold, right? I would like to see that range hold, which is, I want to hold 300, you know, for sure during lunch. I want to hold 300 for sure during lunch. I'd like to actually see maybe 316 be the ultimate floor for today, that would kind of validate, you know, that we are just going to kind of grind higher, and we can kind of look for those positions to get into the long side, because we have been going higher. But again, I do want to point out, this is not a raging bull market. So when you're not in a raging bull market and you're getting these opportunities to go long, there's not going to be a lot of trust factor there, because at any given time we can break that dead cat bounce and then start to flush out and just continue with our macro trend, which our macro trend is pushing down, right? So I would say until the foreseeable future that your longs are smaller scalps with smaller take profits, and you're really trying to capitalize on the short setups when you get, you know, legitimate short setups. That's how I would play it. Again, you know, it's just based on bigger technicals, but we can see here that this 50 EMA is holding. So I'd like to see this range hold as support. All right, I'd like to see that hold. And today, if we are going to continue to the upside, you're going to have probably a beautiful long. You're probably going to have a beautiful long on the previous hour candle high. If that happens, if it never happens, great. There's no trade, but you can see based on the chart, right? I've got a lot going on this chart. There's a lot of squiggly lines all over this chart. Where's the most value? Well, the most value would be if we clear this out, because look at the gap. There's no resistance. So at least the market has a shot at grinding higher, right? Where's the most value to the downside? Well, clearly it's going to be below this here, which is your 20 SMA on a 30-minute time frame, which is below 300. Clearly below 300 to 250. There's 50 points here in this gap. So clearly there's an opportunity to make money there. Okay? Clearly there's an opportunity to make money here. Okay? So when you look at the middle, what do you think's happening in the middle? Back, forth, back, forth, back, forth, because the market's trying to figure out where it wants to go. It's trying to figure out, right? If you think about price action in terms of a battle between bulls and bears, buyers and sellers, who's winning the battle? Well, today the buyers are winning the battle today. Sellers could be a little bit tired. Sellers could be taking a little bit of profits, especially down at that daily support that we came into. Doesn't mean that they're out. It doesn't mean that they're, you know, on vacation or anything. It just means that, you know, buyers are stepping in today, and they're trying to hold this price action a little bit. It's completely understandable. Been going down for 4 or 5 straight days. And I would also recommend too, if you do have problems scalping, you have problems staying on the right side of the trade, get into a bigger time frame and really look at the bigger picture. Like really look at what's really going on. Like, are you going to miss out on a lot in between this range? Not really. Wouldn't you rather be a part of a move that's got more potential to kind of just ride higher, or more potential to just absolutely flush? So you can always do that too. That can kind of keep you a little bit more disciplined as well. Definitely going to have some more resistance here at 391. This is going to have to get over 400 before we really got a lot of room on the hourly chart. 5-minute 20 play here. I'll gamble. I'll gamble. I'm in here. I'm going to take $57 on 3 micros. I'm out. I'm out. And again, that's how quick I want my 20 plays to work. I don't care if it's $50 or not. I don't care if it's 50 or 300. I want it to work like that. Listen up, guys. Like that. If I get in and it works and it pays me like that, I'm out. I'm not telling myself it can come all the way to these highs. I'm not telling myself we can break out to the long side. You know, for the people like, oh, well, what? You're giving you're shooting yourself in the foot because you're not, you know, you're not holding it for more. I don't give a shit. I just clicked the button and I made $57 like that. I don't care. You know, this is not about, you know, I'm not the best trader in the world. I know that. I'm not going to make millions of dollars trading these prop firms. I know that. But I can do 6 figures. That's a fucking fact. Discipline. Sticking to what works for you. That's what people need to understand. You are not like me. I am not like you. You are not like, you know, John. You're not like Tommy. You're not like Susie. You're not like Martha. You're not like, you know, all these other people. You're not like these people. You are you. What works for you? Your strategy might not work to my liking. My strategy might not work to your liking. That's fine. It doesn't mean that my way is better. That doesn't mean that your way is better. It just means we have our own individual ways of how we see the markets and how we take profits. Because at the end of the day, guys, whether you make money or I make money doesn't really matter, right? It doesn't really matter. If you make money, you are not taking anything out of my pocket. Now, on a big grand scheme of things, of course, every time I sell, someone's buying. Every time you buy, someone's selling. But realistically, whether, you know, the people here in here, like if Dave makes money, it doesn't mean that I lost money. If Melissa makes money, it doesn't mean that Simon lost money, right? So it doesn't really matter. Figure out what works for you and hammer it home, because there's enough pieces of the puzzle out there for everyone. And again, nothing is ever owed to you. Nothing is owed to you in these markets. And if you think that just because you've learned a strategy or you've watched a few YouTube videos that you've got all this stuff figured out, no way. No way. Yeah, good. I mean, again, Melissa, if the ES works with your personality, you stick to it. There's plenty of money to be made over there trading the ES. Plenty of money to be made trading the Dow. Plenty of money to be made trading crude. You know, we're all different. And again, chart time and experience also plays a factor too. You know, I would never expect someone who just started trading this month to go out there and handle themselves on the NQ. You know, to be able to say like, hey, you might be able to get away with a winner here with, you know, 12-point stop loss, but hey, on this trade, you might need to use 30-point stop loss. It's kind of like, what the hell? Why? Right? Well, because the volatility in the range is different, guys. Volatility in the range is different. Like right now, we're rocking a 34 points ATR on a 5-minute time frame. That's a lot, right? That's a lot. Are you real? Like I will tell you right now where you should be placing yourself. Are you cool with a 30-point stop loss on the NASDAQ right now? On a 5-minute time frame? If you're not, you should not be trading the 5-minute time frame. You don't like it? Tough shit. Market doesn't care if you like it or not. That's what the range is. Live with it. Right? No one's forcing you to trade the 5-minute time frame. As I tell people all the time, no one's forcing me to trade the 5-minute time frame. I'm trading the 5-minute time frame because I like it. Do I like the range a lot of the times? No, but like, how can I deal with that? Well, maybe I don't go out there and trade 3-4 mini contracts. right? Like I start giving up, $300, $400, $500, a losing trade. I'm not going to be, per contract. Well, I'm not going to be able to stay in the game if I'm trading 2, 3, 4 contracts and I take one loss. I'm going to be up over $1,000 loss on one particular trade idea. When you know that that's not worth it, because you're going to see hundreds of trade ideas. You're going to see hundreds of trade ideas over the course of the month. So for you to absolutely, get fixated, for you to get fixated on one time frame because that's the time frame you learned on, for you to get fixated on a certain time frame or take profit because this person does it that way, who cares what that person does? Maybe that person's okay. Maybe that person has an account size that's quadruple the drawdown that you have. Maybe they've got $20,000 worth of drawdown and you're sitting there with 2,000. You're not even on the same playing field. There's no way that you're going to be able to handle that. It's the same way that I would tell people when I was trading options. I like to trade 10 to 15 contracts at a time. Fire them off quick. my stop loss might be $400, $500, $600. Some people might be buying one options contract for $300. My stop loss is bigger than their entire size, right? They might have a $500 account that they're trying to grow. There's no way that they're going to be able to be on the same playing field. And it's not because I'm a better trader. It's just because their accounts don't match up. So they need to get down, trade something smaller, trade something that costs less, and have a much tighter stop loss so they can stick around. That's the whole idea here, is to stick around. And again, at the end of the day, I think you guys are all pretty confident, and you guys already know that. You know who the biggest problem is in this trading? It's not the markets. It's not the strategy. It's us. We're the idiots. And that's a fact, and we all know it. Like we are the idiots. We are the problem to ourselves. We are the biggest problem to ourselves. And you got to figure out why. Why are you being a problem to yourself? Once you figure out why you're being a problem to yourself, you can then, I got a Bollinger Band sitting at 413. Once you figure out why you're being a problem to yourself, then maybe you can start to make those adjustments to not be such a problem to yourself and get out of your own way. And I already knew what my problem was, and it's still a problem that I work with every day. It's, I know enough to make money, and it comes to over trading greed. Like I'll be green $300, $400, $500, $600, and I want fucking more because I know what I'm doing, and I know that if I can just take another trade, I'm gonna win. And sometimes it doesn't work out that way. So then I start spinning my wheels in the mud, and I go from $600 down to, like, I finish with 180. I finish with 250. You know why? I could have walked away with $600 and been happy about it. But it's in the moment. It's in the moment that those juices are flowing, and your brain is working against you. Those emotions are working against you. It's a constant battle every day. And that battle never goes away either. So if you think that after a certain amount of hours or screen time or months in the market, years in the market, that battle goes away, it doesn't. I'm sorry to tell you. At least for me, it hasn't. Does that mean that you can never be successful? No, of course not. What it means is you just have to live with the fact that you're never going to truly get over that. So you're going to have to learn how to work with it. You're going to have to work with it. I'm interested in this flag breakout here. I will say that. I've got enough room here for a scalp. I will fire a trade off here. Micros. Not looking for much either. I want to see a definitive break through my line. I've got to keep in mind that this is a 16-point candle I'm looking at here. I'm at least risking 16 points. I'm not in yet. It's broken it, but it's not holding it. I want to see a definitive break. I'll walk this trade out through and through. I'm in. This range is now 19 points. So if I'm not comfortable with 19 points, you better get out of the trade, right? If you're not comfortable with at least 19 points, you better get out of this trade, or it better work for you, right? You better snag profits before it comes back. We're up $30 here, $25 on a few micros. 34. It's not going to give me 40 bucks at least. We're at $30 again. Nope. Pulling all the way back here. I'm up 20, 13, 22, 24. I won't give it a lot of time here. Basically coming back to break even. I'm only up 10 bucks. Pushing back up again here. It's not wanting to do it, huh? See, I like to see a little bit more pop. I need to see a little bit more juice. Am I truly okay with giving up 19 points as a stop loss? No. So what am I going to do? If this really starts to like fall against me, I'll just get out. Basically break even here now. We're down 20 bucks and I'm out. I'm going to take a small loss on it. Did I take a 20-point loss? No. How much did I take loss? We took, I'm going to look at this because this is going to make sense here on how you can manage this type of crap. Come on. I gotta spread this out. We took a $39 loss. $39 loss. Now, at one point in time, I was up $35. So you could have taken 35 bucks, right? Could have taken 35 bucks. The whole battle here is when you get into these trades, you're trying to get green enough for you to like feel comfortable about the green before it goes red. And look at how that was a great exit. Now, for someone that just says, well, I'll just sit in this trade because of XYZ, well, guess what? You just took a full 20-point loss. What the hell? You didn't need to. Didn't work for you. Didn't explode through that level. You weren't happy with the profits that you had. So great. Now that it's coming back against you, just get the hell out of the trade. I could make a case that on this 5-minute time frame, it's not the best looking one, but that this is an inverse head and shoulders, with this being the neckline. I could make that case. Which I might be interested in that case too. I'd like to see confirmation over this neckline. 408. Guys, make sure you're also hitting the like button as well. Really appreciate it. I might be interested in 1 or 2 more trade ideas, trading micros, and that's about it. So far, we got a lot of support building up below us, but again, we are in lunch, so volume is down a little bit here. Apex, yeah. Today I am. I trade with Apex and Top Step. Apex today. Here's also something to kind of note. If you do catch a bigger trade, profit-wise, size down. Because look at this. 60% win rate today, but the largest losing trade is 50 bucks. The biggest trade is $640. So essentially, I've just chopped myself, and this is a point I want to make. Really great trade off the open, off the 30-minute opening range. We made about 600 bucks on that trade, 500 bucks on that trade. And what do? Sit around and just spin my wheels in the mud. Balance is really not going any higher, you know. And on top of that, average winning trades 241, but on top of that, we're just kind of chopping out, right? Like 2 losing trades here, 3 winning trades. So I'm not even growing the balance at this point in time. I'm just kind of like spinning my wheels in the mud. So that's why I said I'll give myself 1 or maybe 2 trade ideas left here. If I don't win the next trade, I'll probably cut the size down again, try 1 more trade idea, and then that'll be it. Realistically, you know, what should I probably do? Just walk away. Walk away with a $613 day. Just walk away, right?
Kids screaming in the cradles, profanities. I see the world through ice covered in ink and bleach. Cross out the ones who heard my cries and watched me weep. I love everything. Fire spreading all around my room. My world's so bright, it's hard to breathe, but
Five-minute 20 SMA plate in the middle of the range. I don't really like it as much. I want to see this get broken up here. Patience, guys. These are the times where patience is going to really help you out here. It's easy to get caught up in trying to go back and forth and anticipating the breakout, anticipating the flush. You don't really want to do that. We got a lot of selling pressure up here at this 100-day moving average on a 30-minute time frame. Look at the wicks today. 1, 2, 3, 4 wicks all getting rejected right here. And again, I believe going back to yesterday, right? If we go back to yesterday, isn't that around the ballpark of yesterday's price? Yeah, look at yesterday's price. Look at yesterday's price right there in that ballpark. So we're getting rejected at yesterday's highs. Never a good thing you want to see. And that's what you do tend to see a lot of times in a weak market, right? In a market that's not buy-side bias, is that you kind of test previous day channel and then it has a very tough time, right? If this was a raging bull market where we're pushing highs every day, then we come up to that area, maybe we test it once, twice, and then boom, we break through and we're off to the races to the next supply zone. But you can see, you know, your better opportunities are still the shorts, right? Your better opportunities are still waiting for it to, test those supply zones and then kind of shorting it back down to the middle of the range. Or you're taking shorts through previous, you know, hour lows or previous day's channel or whatever. You're gonna take the next wick short. Yeah, cool. So that way it'll break out for everyone else, and then, you know, it's basically you take the fall for us so we can make some money. Perfect. It's normally what happens, right? The time we try to short it up here with the time it breaks out for 50 points. So again, just for your short position here, you have support at 342. If you break through that 327, I'd want to sell between 40, and I'd want to start selling anything below 40s or even around 40. It's always the case, man. I don't know how many times I've done that shit. It's like, okay, cool. You want a range trade? I'll short you then at the top, and the damn thing runs after that. It's like, come on. Literally, time I decide to do it. Uno, if we do start breaking 40s, just grab some gains. That's what I would do. It's the #1 catfish. We're coming into a little bit of support here at the 28s, guys. There it is. There it is. Good move. GG's on that one, Uno. It was also a 5-minute 20 SMA play. I mean, I didn't trust a damn thing, but it was great. It turned out to be a great move. $317, $304. I'm gonna take a buy side here with a stop under 302. Actually, that's probably the wrong decision, because it can come up to 287 or come down to 287. If this support doesn't hold. 317 to 304. What is this? 303? We're up $50 on this, $60 on this, $40. Coming back down. I should have snagged that damn thing. Should have snagged it the first time. I was looking at my damn phone. This starts losing 317. It's going to be an easy stretch into 306. $305, $302 is support here. Below that takes us to $289. Takes us all the way back to this wick at $725. $15-minute chart broke down through its consolidation. Support at 290. Fucking looks like shit. This upwards trend from today breaks if we close below 288, guys. I can actually see us sweeping as low as 260s if this 200 moving average on a 5-minute time frame gives way. Bulls got to hold this area here. 290, they've got to hold that. They don't hold that, it's going to get ugly. You got a ton of room down here. You got all this space down here where this is just going to fall pretty easy. This uptrend's got to hold. It doesn't look the best though, to be honest. Like, Nice work, Bodo. Bodo, what size are you trading? How many contracts? Nice.
Let me in or let me go. Honestly, try honesty. No, just tell me what I want to hear, 'cause it could save us. Let me fly, I've got my hopes, but I can hardly see why I'm still chasing. It's not worth it for me anymore. Crashed and burned 100 times, I'm lost. I just can't let this go. Every last chance I had is gone, but I just can't let you know. I just can't let you know. But I just can't let you know.
10 minutes before we come out of lunch here. Last bit of support here, 288. I could definitely see a flush of 288 before it starts to try to attempt a dead cat bounce.
Booking.com has stays for absolutely anyone. For instance, imagine you're a family of nervous Nellies heading on vacation. You discover a hotel in that area that everyone online says is the safest, right near the train station. There's a 24/7 doorman who's basically a human shield, a lobby that screams, nothing sketchy happens here. Nervous? Not anymore. With so many choices, even nervous Nellies can find their perfect stay. Find exactly what you're booking for. Booking.com. Booking.yeah.
1 hour chart setting up an inverse hammer. If we do confirm coming out of lunch, you could definitely see a sweep lower here. So far all we did today was come up to yesterday's channel and just sell off. So bulls still don't have any, they don't have any steam at all. Those bulls, they don't got nothing. Whoops. Those bulls got no steam whatsoever. We're just gonna go the other way on those motherfuckers. If they don't want to give it to me, we'll just go the other way. That's fine. Just go the other way on them. So we've lost that 5-minute 200 SMA. That was it. So basically, you know, keep things real honest. We lose this 20 SMA here. I'm forced to get out of that bounce that I tried, and then I just flipped them for mini short. That was it, basically. I don't need to do too much there and overthink it. So now this becomes a short zone here on the next hour candle. So any type of bounce that gets rejected and loses 255s, it's got room all the way down into these wicks over here around 210, 220. So I'll just leave that on the chart. we could be looking at a little bit of a reversal just based on that edge fold data, guys, that I gathered, you know, about a month ago. In the past, you know, 6 to 12 months, the average consecutive same color candles is anywhere between 5 and 6, and we are printing 1, 2, 3, 4, 5, 6 red candles in a row. You could be looking at a short-term reversal. It doesn't mean that it's coming to the top. It just means a short-term break in this downtrend. Whether that gives you 5 points, whether it gives you 20, whether it gives you 10, I don't know. We don't, like, that data is not going to be provided to us. But, you know, I might be looking for a sweep of 55s and then break back into 55s. I might take that for a ride. I'm going to have to wait, though. I got 3 minutes on this 5-minute candle. Even this break of the 200 moving average and then going short, you would have picked up 5 to 10 there. So if this was the last area of support that we had before, you know, this big gap, allow it to break the 200 and then confirm, almost like a 20 play, and then scalp it. Whether it holds and how much it wants to stay down here, I don't know. It's a little risky, just because, you know, the way I think about it is like, okay, we've been trading down for 5 candles. Like, how much can it give me potential? You know, looks like now a lot, you know, 20 points, but it'd just be a quick scalp idea. I would treat that the same way I treat my 20 SMA plays. I've taken those plays a lot of times too. Kind of was a thought process when I just flipped short after that long bounce. Basically, during lunch, we reversed everything we did essentially since the open. That is the prime example of what can happen in a weak market, right? If this was a strong market, you would get your pullback probably into this range here, and then it would start bouncing, right? Because it's a strong market. The market is clearly showing us that we're very weak, because regardless of how big the dead cat bounce was today, you know, over 200 points, it basically just wiped almost everything out. You know, very almost basically in a few 5 to 6 5-minute candles, like just basically wiped it out. Sweeping lows again. I'd actually like to see it get down in this range here. Seven red candles in a row. 7 red candles in a row. I'm looking for this sweep to stop and see if I can snipe something very quickly. That'll be my last trade of the day. I'd prefer if it swept this damn box here. Essentially, we are almost back to flat on the day for the NASDAQ. Literally wiped out about 200 points. There's the sweep. Again, if we look, we just swept the opening range. 20 seconds on this 1 minute candle. If we confirm the high of this 1 minute candle, I'm going to try to scalp this long. I'm into this trade. I don't like that it's a 26-point previous range candle, but we're up a little bit here. I got resistance at 250. Previous 1 minute or that original 1 minute candle needs to hold. So 210s. 210s doesn't hold. I have to get out. And it might actually take it out once more. Now that we're out of lunch officially, it might actually take it out once more and completely get everyone out who is long, right? And then bounce. It's just the way, it's just how they do it. So we'll see if we can catch a lucky bid here. But what you might see is something like this. And then like that. That's probably what you're gonna see, but we'll see here.
No, there ain't no stopping us. Fly without boarding pass.
You have a hell of a flag pattern short here.
Call me a shooting star.
I'm gonna get out. I'm just gonna get out. I don't trust that. I don't trust that at all. I need to see. I'm gonna try this one more time over 240. We can get over 240.
I
1, 2, 3, 4, 5, 6, 8 red candles in a row. There's the sweep of the lows. So anyone who had their stop loss sitting right there at that low just got tagged. Let's see if it grabs more. If it actually falls into this gray box, it's going to pretty much take out anyone who was long from the start of the day. We'll see. 30 seconds on this 1 minute candle. Double bottom here so far. Really going to look at this next print. Okay, let's try this one more time. Resistance right here at around 246, and we just tagged it perfectly. I'm just gonna get out. So that was $84, a few micros. All right, guys, I'm done. We're just gonna end the day there. And to be honest, again, I will say this: the longer I trade, the worse that I do. We had a one point in time 65% win rate. I mean, basically today, the only thing that helped me was that the wins were bigger than the losses. So 50% win rate today, 10 trades, right? Largest winning trade was $800. Average winning trade $326. Again, that's when I had to fire away minis on momentum, but still through and through. The number one thing to probably do is if you take a couple trades, and again, it's you got to find your sweet spot. For me, it's like 2 trades, 3 trades. If after 2 or 3 trades you're green, it's probably better to just walk away, because what ends up happening is you just take more trades, you get stopped out on some don't work, some work, and then you just like spin your wheels in the mud. Like realistically, I wasted another hour and a half of my life essentially to just I mean, be a little bit more positive, but not that much more. It's not like it was like life changing to stick around and trade for an extra hour and a half. And again, with futures, it's just so damn hard because of the fact that you always feel like you can just catch that next one. And that's probably the never right mentality. Again, you know, market just completely erased everything that it did today. The market is still very, very weak here. Let's just kind of look at the daily chart before I get off. I mean, if we look at this daily chart, I mean, dead cat bounce, great, but what did we do? Nothing. We didn't take out yesterday's highs, we didn't take out yesterday's lows. Inside bar day where we came up to the top of yesterday's channel and then just sold off. So we've got a little bit of support at 81. We've got support at what is this? 21,142. It might be the next stop, right? Anything below that, then you're coming all the way back down to 21,000. So it is what it is, right? Who knows when this market's going to get out of this funk that it's in. You know, I think it's going to remain this way for the remainder of this month, for a fact, and we probably don't even square ourselves away until, you know, honestly, until the middle of March, end of March. The weekly chart looks pretty weak too. Look at the weekly chart down at its 20-day moving average. If this weekly chart next week, guys, one thing to kind of keep in mind, if this weekly chart starts to lose this weekly flag pattern, it's over. It's over for the bulls. You know, that would be confirming this week's lows of 950. You're going to see a drop to 20,785. I mean, that's realistically where we would be heading with no real support, honestly, until about 20,000 even, right? So do they want to bring us down that much, right? That would probably be 4 weeks of just downwards motion here without a dead cat bounce. This week is going to be crucial depending on how the bulls close this week. If the bulls close this week down below this you know, multiple week trend line going back to first week of January, I mean, we can probably go back, right? If I was to drag this across, I mean, this uptrend has held since November 4th. If we start losing this trend from November 4th, you know, I can go back more. Here's another touch point here, all the way back to September. I mean, since September, we've been riding this uptrend. If we start to lose this uptrend, 20,000 is coming, you know? And I think people need to be prepared for that, because it's going to make for some very tough trading. It's going to make for some stocks to really go down a lot, right? A lot. Like if you just take a look at some of your big ones, things like Tesla have been getting hammered, right? And if you look at Tesla on the weekly chart, I mean, look at Tesla from its highs of 488, December 16th, you know, coming after a little bit after earnings here, or before earnings, right in the middle of the earnings to earnings. I mean, we hit highs of 488. We're back down to our 50 EMA on something like Tesla, right? It's all the way back down here. You know, Tesla could still drop 260s and then, you know, still be in bullish context, but 260s, I mean, you're talking about another 30 bucks down from here. Something like Nvidia is what might save the market for the bull side. But I would want you guys to really pay attention to this, because today, right, if you look at what's going on here with Nvidia is also holding its weekly 50-day moving average. And if I look at the daily chart on Nvidia, right, you've got earnings today, right? So after the bell. So is Nvidia going to save this market? For the past 2 to 3 years, Nvidia has held this market pretty much single-handedly on the NASDAQ side of things. If they sell Nvidia off, and because Nvidia just touched its daily 200-day moving average, which is very, very significant. Very, very significant. If they sell Nvidia off and we end up today after the bell below the 200-day moving average, it's almost a sure thing that the market is probably looking at another 2 to 4 weeks of downwards pressure. If they spike Nvidia and they really start to pump Nvidia over 137, 140, you know, take out this previous swing high, then that might be the kickstart that the market needs. All focus, all eyes are going to be on Nvidia after the bell today. If we wake up tomorrow and Nvidia is trading pre-market below the 200-day moving average, it is not good for the overall market as a whole. What is Nvidia's weekly chart at again? 50-day moving average sitting at 120. If anyone plays earnings and you do like a condor, you're gonna play both sides for that volatility, you'd be targeting 138, 140, or 120. $10 up or down. We'll see. All right, guys, I'm logging off. Stay safe, protect yourself, make sure to hit the like button on the way out, and I will catch you guys all tomorrow.